Welcome back to the show, everyone. I got a good buddy of mine, Eric Brewer, out of Pennsylvania. I think this is his third time on the show. So I feel like, every 2 years we catch up, we see what you got going on in your business and what you guys are doing to stay successful. So thanks for coming back on, my friend. It's always a pleasure.
Yeah, I appreciate you having me.
Absolutely. So if people are not familiar with you and they didn't hear the first two episodes, give everyone just the 60-second Cliff Notes version on who you are and what you do.
Oh, goodness, 60 seconds. I'm a father of six, an employer of 44. Been in real estate since 2006. Born and raised in the same area I live and do business in now in South Central Pennsylvania. Last 5 years, I've been relatively obsessed with development as a leader, and that's opened up some amazing opportunities for us to grow as a company, to create other leaders, to expand into different businesses, multiple markets, and just super excited about what the future holds.
That's awesome, man. Are you done at 6 kids or are you going to go for 7 or 8?
Unless something that I'm unaware of happens in my life at this age, I am done at six. I got a perfect life.
That's awesome. Well, first of all, let's do a state of the market. It's 2025 right now. We're halfway through the year. Ever since interest rates went up in mid 2022, seeing a lot of quote unquote good real estate buyers not be very good because they were relying on low interest rates and the market going up and hedge funds buying their properties. So, what have you guys done since mid 2022 to stay relevant? Because you and I know a lot of the same people, and there's been some people who have basically gone out of business since the market shifted.
I think the real answer to that question is there's probably been hundreds of things we've done. I mean, you think about, what is that, 3 years we're talking about from mid 2022 to today, but that's like in the world of real estate, that's 36 months. It's 1,000 days. It's, every day's got what, 5 up and downs.
Yeah.
I mean, there's literally 6,000 opportunities, let's say, to fold or improve the last 3 years. So I would say there's probably been 1,500 things that we've done that have allowed us to not only survive, but our outlook today and moving forward is bigger, more profitable. I'll say easier because it comes with just the effort and the results. There should be less experimenting or trial and error, right? Because hopefully at this point we've made most of the mistakes. But the most recent stuff, I think, is we have taken a very strong approach towards talent, where I used to be in a hurry to hire, in a hurry to train, always in a hurry. I think that's probably relatively standard protocol for our industry, is just moving at lightning speed, but sacrificing often quality. The one area that we're not willing to do that in is people. It now takes about 5 interviews to get hired here. We've gotten better and will continue to try and improve in turning away really good people and hold out for great.
Yeah.
Which is tough to do. And then training has become something, we used to train maybe our salespeople once a week. Now we train daily, and that's had a massive improvement. I mean, we consistently win deals from 2 to 5 other investors. And I would tell you, very rarely is that because we paid more.
Yeah.
So we literally, it was the beginning. When did the last election cycle start? When did real campaigning?
That was probably like the spring of 2024.
Yeah. So
You're
right
about-
around the spring of 2024, our current president, Trump, would say, drill, baby, drill.
Yeah. Yeah.
We moved that into train, baby, train. Because like his explanation was like, man, this is going to reduce this. And it was a root problem in his eyes that would lighten the load of all of these other super important things. And as we looked at our business and where the most impactful decisions are made, man, if you can just buy really good assets at really good prices, geez, that takes a lot of pressure off of construction. It takes a ton of pressure off of dispositions. It takes a ton of pressure off of marketing, right? One of the best things you can do to make your marketing director look like a genius is close more transactions.
Close more deals and get a higher ROAS, right?
Bigger spread. Yeah. And he goes, you're doing a great job with marketing.
Yeah.
So yeah, we said, man, we're going to train, baby, train. And we are literally obsessed with it. I mean, we do 20 minutes of live practice slash role play every single day with our people. We have an hour of facilitated sales training that the entire company participates in every Wednesday at 10 a.m. And it's made a massive difference. So that's probably talent and training has been the most recent noticeable things that we've done to stay ahead of the market.
I hope everyone re-listens to what you just said because, like you mentioned, you could do all the marketing in the world and spend and buy the clicks and whatever, and if you can't convert those deals at discounts, like you said, you're gonna make your dispo team or your realtors work harder than they need to. Everything is not gonna flow right, but if you can get that house that's worth 300 for 175, everyone else's job is gonna be easier, and that's the biggest lever you can pull.
Yeah.
Because I've seen this with other wholesalers who try to sell me deals. They're trying to sell a deal that just doesn't make sense because they did not pay the right price, and they're trying to, polish a turd to, to say better. You see this all the time.
We had a good example of that was yesterday. We sold 2 deals yesterday that will close on the 27th. So let's call it from the 18th, 9 days, and we got the leads this week. So we got the leads Monday, acquired them on Tuesday, sold them on Wednesday, and we closed. So that cash conversion cycle, from lead to revenue is 14 days.
Oh, it's huge.
If each of those deals we paid more, maybe they don't sell to a cash buyer. Maybe we have to renovate them. And now, our average renovation turn time is about 8 weeks for construction. And then you got 5 days for staging and pictures and cleaning and punch list. And then you got another, say 2 weeks for marketing and being on the MLS. And then it's a 6.5-month version cycle, all because we just didn't do a good enough job to buy it at a deep enough discount that we could make our reasonable amount of revenue selling to another investor or a retail buyer that's willing to put in a little bit of sweat equity. So that sort of pivotal moment we've discovered takes a lot of pressure, like we said, off of other departments. And if we're going to get great at one thing, it'll be at training, which makes us better at servicing clients to the highest level. And then they're willing to share some of their equity with us.
100%. And you mentioned something else earlier that I want the listeners to make sure they hear is that, in 2025, it's a lot different versus when you started, where now when you're getting a lead that's, quote unquote motivated, they're probably calling 3 or 4 buyers at minimum. And you have to stand out and compete with the other buyers by not paying more. And that comes with the training and building the relationships and getting that seller to want to sell to you for less money because they like you and you understand how to solve their problems, which comes from training. So all these little things add up, and that's what really can separate you from the pack. And good on you for doing that, man. Because I know a lot of people they don't want to do that. They just think they can spend more money in ads and find some secret list that no one else is marketing to, which doesn't exist, or do some strategy that no one's ever done before. Which I mean, nowadays, if someone has a strategy, it goes out on the internet and then everyone can win it. I think you invented novations in the real estate business.
Kinda, yeah, or at least novations were around.
Yeah, you popularized it.
They were I don't know that they were being used in residential real estate,
Yeah.
way that we are today. But yeah, and that was done out of necessity because just like mid-2022, in 2007 and 2008, I was flipping a bunch of homes to FHA buyers I'm sorry, flipping a bunch of houses to mid-credit, mid-down payment
Yeah.
borrowers that were able to get subprime loans prior to the economic crisis. And then as soon as that unfolded, 100% of buyers in the market were FHA because it was like the only loan product you could get was federally backed mortgage. And that was bad news for a house flipper because of seasoning issues. So I started looking for a workaround for FHA seasoning and got introduced to contract novation law and then overlaid it to what I was doing and said, well, dang, I think if the seller would agree to this and the title company saw it the way that they should and the lender didn't treat it as a transaction, this should work. And I went to an auction and made an offer and they said yes. And then I found a buyer and I talked to the lender and they said sure. And the title company gave me some blowback, but we argued until we came to a compromise and then it was off to the races.
I remember when you started talking about novations, I couldn't wrap my head around it for a while because I understood how it worked, but I'm like, why would someone ever do that? And then I
Yeah.
came to realize after doing a bunch of them, you add a lot of value to the seller. And I can give a case study on this in a minute, because you teach it the right way and you are very good at communicating how it actually works. Because I had to explain to someone out here in Seattle. They heard 3 other people explain it, and then they had me on their podcast, and I explained it like a 3rd grader, and they were like, "Oh, that makes sense," like the technicalities of it. But anyways, we have a house right now. We could have bought this after we realized what we sold it for, but we didn't know in the beginning. This lady, she needs to sell her house at a certain number, and she was willing to sacrifice speed for convenience, right? And she didn't have the money to put into the house to get it to be worth fair market value. Turns out there's a buried oil tank under the property that has to come out and has to get done before this buyer closes, right? So we're literally going in and paying for that, getting all that done. I've done this before because I'm a house flipper. And if it wasn't for us doing the novation, she would have been screwed because she doesn't have the money to take it out and she doesn't have the experience to do that. So, when you're doing these novations, you really bring a lot of value to the sellers, and people just don't realize that. They think you're just some glorified middleman. And it's like, if you really do it the right way and you transparently communicate it like you teach, I've never had a seller on a novation get pissed at me for making 30 or 40 grand ever.
No, and it's funny, if you were to just to an outsider, if you were to explain a wholesale deal, they would say the same thing. Why would a
Yeah.
seller ever do that?
Yeah. Yeah. Exactly.
So, like, we just get used to wholesale and, everybody's in their mind, been able to wrap their head around why a seller would sell a house at a deep discount for minimal inconvenience. Well, it makes perfect sense why someone would sell it at a small discount for slightly more in like what we've established, that there's a value to some people for convenience. Well, that shouldn't just be one product and one level of inconvenience, right? Shouldn't there be varying? I got news for you. Like, selling a house with a real estate agent has maximum convenience, but maximum price. Selling it by way of novation has a little bit less inconvenience, right? And a little bit less money. And wholesale is the least amount of money you could ever imagine and a matching amount of inconvenience. So to me, it makes perfect sense, right?
Exactly.
Hey, you could sell your house on Craigslist, and that's a little bit weird and a little bit scary, but you'll get the most amount of money maybe in your pocket. You could sell your car to CarMax, right? And maybe get a little bit more than trading at the dealership. Man, you gotta drive it over there, and now you gotta pay sales tax. So we've been making decisions about cost and convenience as long as things have been available for us to buy. It's actually very shallow and selfish to not do novations or sub two or seller finance or install. Like, the more products that you have available to offer your clients, the wider range of solutions you're going to be able to offer them versus saying, "Oh, hey, you'd like to get X amount of dollars and closing it. Why don't you do this nice wholesale deal?" And they're like, "Wait, that's not enough money. And that's faster than what I need to move." And you keep going, "No, it's what's best for you."
Exactly.
But no, it's not. It's not. So, yeah, it's funny how perspective is a very valuable thing.
I agree, dude. And I realize that at least in most scenarios, maybe 1 out of 10 sellers needs to sell in 20 days. I mean, most people are like, I like to close at a convenient time, but I'm not dying to get out of here. Therefore, giving them more money to do a novation is perfectly fine, and they don't have the money or the desire to fix it up. So, yeah, maybe one. And listen, 1 out of 10 leads that wants to close in 21 days, they're willing to take usually a decent discount for that because they
Yeah.
know that you're going to buy it in 21 days or 2 weeks or whatever.
Sure.
So
Yeah.
that's not your typical avatar, especially if they're living there. Like, get out in 21 days. Anyway, I digress. But
Yeah.
something you've also done since we've last caught up is you've expanded into some different areas. So what has been your blueprint on doing expansion with a good strategy behind it and making sure that you don't just expand to expand, but you're expanding the right way?
It's ever changing because as I go into markets, I get immediate feedback and we learn, and I've been in and out of 3 or 4. So I'll give you the best that I can in somewhat of an organized fashion, the criteria that we consider. And then I'll tell you what I think the future facing version of expansion looks like for me. Now, I want you to put a pin in what you said about people that were good house buyers that have either struggled or closed doors. So, like, take that and put it up on a little shelf up here. And I want to bring that back into the conversation later. But I would say in the beginning, like, our lead criteria for an expansion market was, hey, it kind of looks and feels like the market we're already having success in. So our commercials and postcards and our salespeople and all of those things should work pretty well over there. And what my market is historically it's been cheap. and a little bit rural, right? So when you look at, you have like major metros, right? Like Chicago and Baltimore and New York City. Then you have like a secondary market, which might be like, a smaller market where it's still
Tampa.
correct. Yes,
Yeah.
perfect. And then you
Austin,
have
Texas.
tertiary markets.
Yeah.
So good rental markets for investors, safe flip markets, but we never had institutional buyers come here, never
Yeah.
had funds. And I would go to mastermind events and they go, "Hey, what's your median sale price?" And I'd be like, 170. Or like, huh? That's my average rehab.
Yeah.
So I was like, "Hey, where are other cheap houses?" And then we would go there. But then what I realized a lot of times is in most cheap markets, there's limited investor activity. So that we had to renovate and flip everything. And those markets might not be super desirable for retail buyers, right? So that would evolve a little bit. And we go, "Hey, let's go to cheap markets with high investor activity." So we evolved in that way, right? So you can find places like Columbus, Ohio, 5 years ago was a gold mine because
Yeah.
there was tons of investors there, but you could literally buy homes for $40,000.
It's crazy.
And we've learned that now, right? And then the thing I've realized though is that, on those houses, while volume might be good, my margins are tough because I'm trying to make 20 grand on a $40,000 house. That's tough. And as we've improved our operations and increased our confidence, dude, I'd rather go into a market where the median price is 4 million because if I'm going to make a 15% margin, that's way more money than making 15% here. So then that got layered in, right? We're like, "Hey, where can I go where there's investor activity and the biggest margin opportunity, but yet it's similar in some capacity to the demographic of the employee?" And so now this is all getting baked in. So for us, the current expansion markets we're in are subsidiary surrounding markets of the metro Philly area. The same thing for Baltimore. So Philly's only an hour and a half east of me. Baltimore is 40 minutes south, and Pittsburgh is about 3.5 hours west. So I'm in all three of those markets in the surrounding areas of the metro area. And the reason metros are tough because when you're not from that area, man, particularly in Baltimore and Philly, you can go one block over and go from $100 to $1,000 house, right?
Yeah.
Like there's a rule in Baltimore says if there's a board up on the block, we don't touch it. It's a no-fly zone. I learned that the hard way.
Yeah.
This house is worth 265 and it ends up selling for 65 because there's literally a yellow tape everywhere and chalk lines and it's
Trap house. Yeah. I mean,
straight
that's
up trap houses. Yeah.
so you're sticking to like, for example, the counties surrounding Baltimore, the counties surrounding Philly, the counties surrounding Pittsburgh,
Yeah.
that's a great plan because you're going to have similar scenarios like your Harrisburg surrounding counties where it's somewhat similar where you're not dealing with inner city properties that often. You got probably more 3-2 ranches in the suburbs that are selling in predictable numbers.
Yep.
And it's easier to get a rinse and repeat going versus like, yeah, you get a house on one street in Baltimore, it's 30 grand, then the next block over, it's I don't know Baltimore, but I would assume that's how it is.
Sounds like you know it. You just described it. So now the next layer is I will expand into markets where there is a viable, proven partner. What we've become great at, or what Jim Collins calls your hedgehog concept, right? Like, what are you world class at? What drives revenue and is scalable? For us, it's building high performing sales machine. That's the thing that I on a repeatable basis have succeeded at every level of every season throughout my career. But you can't just be a salesperson and run and scale a real estate operation. Keyword operation. You need scalable systems, processes. So our partnership expansion, we think we'll be in 50 markets in the next 5 years. We will find skilled operators that are struggling to achieve their targets because they can't build sales machines. So I'll basically partner with integrators all across the country. Integrators that run refined operations but don't know how to generate leads. They can't hire A-talent salespeople. They struggle to build a culture of sales inside of their well-oiled machine that has no leads and no contracts.
It's like a well-oiled machine with no oil.
Right. So basically what they do is they've been buying from wholesalers. So we just see those margins continue to get, like, imagine the guy that was wholesaling to a house flipper in Washington and the wholesaler figured out innovations. He'd never wholesale this guy's stuff anymore.
Ever.
Because he would sell it on the MLS to someone that would pay more or take it to a retail buyer. So for those guys, that were really good operators and great at construction, and now we're forced to build a sales culture. It's tough. So that's our expansion model moving forward. I'm working on like the vetting process of partners and what it looks like, and how do you split out revenue? What does responsibility mix look like? How do we handle financing? What happens if we acquire debt to flip homes and
Yeah.
stuff? But I think I can expand into no less than 50 different markets with 50 different partners, and I'm pretty excited about it.
That's awesome, man. Have you ever thought about just franchising your brand? Like some other guys have done that.
Yeah, so that's I don't know, because when I describe what I'm saying, it sounds like a franchise, right? It's got a lot of the mechanics of it, so maybe
Right, yeah.
that's what it turns out to be. I'd have to work through the mechanics of how that would work, and maybe that's what it ends up being. I won't
Yeah.
know enough probably throughout the end of the year.
Yeah, because you got a good brand. I mean, Integrity First Home Buyers could be anywhere, right? So whatever it ends up shaking out to, it'll be successful, I can tell you that. So
I hope so.
you mentioned some of these East Coast areas, like these areas you're describing are not terribly far from your central location. Have you ever thought of saying, let's give Phoenix a shot? I mean, I know you'll get there eventually, but like at this point, are you trying to stay within the East Coast just given the logistics of it? Or if someone,
In the absence of
yeah,
partners, I will stay close.
yeah, you stay East.
If I have a partner in Phoenix, I would run to do it. And as legislation continues to increase and you have to physically close on more stuff, which is a
Yeah.
reality of,
Yeah.
and you can get yourself in a bad way if you're running a virtual operation buying. I mean, if I'm running 50 markets, right? We buy 40 homes a month in this market. If you're in 50 markets and you average 20 acquisitions a month, it's 1,000 deals a month.
Gosh, yeah.
If 20% of those go bad, that's 200. If each one you got 250 grand in cash in, that's 50 million. And if you lose 20% on each of them, you could lose 10 million a month. So I don't want to be tied down to one exit strategy. Because when you said the rates, went up in 2022, hedge funds stopped buying, a lot of landlords stopped buying,
Yep.
retail buyers didn't. So in our market, I was able to, through novations, continue to take stuff to the market, and I was good. If I had a turnkey, duplex that I built, I pivoted and sold it to a retail buyer. So I think you become extremely vulnerable when you have one exit strategy, whether it's just fix and flip. I've seen people that got pinched on a bunch of fix and flips because they couldn't wholesale. When
Yeah.
the market pivoted and Vegas cooled off, they had, 30 homes at 600 grand each that each dropped by 20%. They had to sell them, but had they been able to wholesale through that cleansing of inventory, they would have been able to offset those losses. So I've benefited from being a nimble, well-rounded investor, and that'll be my model. As I go into different markets, I want the ability to novate, wholesale, hold tail, fix and flip. So that's extremely scary in my eyes without having a local partner with a vested interest who's signing on the debt that you got to share in the profits. But to me, when you're operating in this business with the money that we have the ability to make, I'd rather give up 40, 50, 60% of the profits and 40, 50, 60% of the liability. It'll allow me to scale bigger and faster, knowing that I have solid partners behind me.
100%. And then you mentioned earlier that multiple exits. I tell new investors this all the time when they reach out to me. I'm like, listen, I know wholesaling sounds sexy and it is kind of sexy if you could pull it off, but the market's changed and you need to have multiple ways to make money. And I told you before we hit record, there's this wholesaler and young kid. He's like, you need the numbers on this deal. And I'm like, dude, buy that house. Why would you wholesale that? You're going to make 100 grand. A lot of people just can't. They're like, oh my gosh, really? I'm like, yeah, dude, I'll show you the numbers. I've done hundreds of them. Like here, where do you think, actually, let's pivot as we start to wrap the show up. If you had a crystal ball, obviously, where do you think wholesaling as an industry, like I'm talking about assigning contracts for a profit, will be in 5 to 10 years? Do you think it will be almost illegal, or what do you think is going to be the end game? Because it has gotten so popular over the last 5 years. It's like mainstream.
It'll be more like being a realtor. I think
Mm,
you'll have maybe a different set of rules. I'm a person that likes an open and free market and
me
thinks that
too.
for a lot of things that the government should stay away, but it was probably time for some type of legislation to be introduced. And honestly, for us, the stuff that they did in Pennsylvania, the only complaint I had is it forced me to change, and
Yeah.
change can be hard and it
Yeah.
costs money and it takes time, but I don't have any problems with what they've done. We've been able to pivot, and I don't know that it had no negative impact on us. There was a period of time where it took me longer to get to revenue because of the way that we have to operate now versus before where we could assign a deal in 3 days.
Yep.
Now we have to physically go to closing and there has to physically be money that changes hands and like you can't do an old-fashioned assignment really in Pennsylvania anymore unless you got to give the seller 30 days to rescind and all this other stuff. So we said, what if we just took down every property and funded it, had a recorded interest or physically took deed? And we decided to go that route. So there was probably maybe a 30-day period where our deals took longer to get to the finish line. But I can honestly say that there's no evidence that we had a dip in revenue. If anything, it's forced other people either out or where their buyers are backing out because they go, this is wholesale. And I see that you don't really have to buy it. And I'm going to call somebody that's going to just close on it or list it with a realtor. So it's actually benefited us by everything that I can tell. So I think you're going to continue to see, I think it happened first in like South Carolina and then Pennsylvania was right behind it. And now North Carolina is, but I think it's good. I think it'll raise the barrier of entry to get into, and maybe you'll have to have lines of credit. Maybe you actually have to have cash to
Buy the house as a house buyer. Isn't that
You
a
would have thought.
concept? Yeah. Who would have thought you got to close on the house?
Yeah. So yeah, I think it'll be good. I think over time, it'll improve consumer confidence, which is probably a big barrier for a lot of us, right? It's like, hey, I don't trust those guys. Well, if those guys had to operate above board for a period of several years, it would actually make business, most of that stuff, when it's done correctly, makes business easier. So we'll have to fight through a little bit of that for a short period of time, but I think the long game for legitimate operators will be a positive.
Better marketplace, less competition. It'll weed out the jerks. You want to hear what's going down in Washington State next year? This is an interesting one. So allegedly, there's a lot of bad operators up in the PNW, just it's a huge, giant metro, and there's good and bad people. So apparently, going forward in 2026, if you lock up a house off market below market value, whether you're wholesaling it, buying it, doesn't matter. You have to pay for the seller to get an appraisal out of your own pocket. And if the appraisal comes back higher than what you're under contract for, which 99% of the time that is going to be the case, seller can walk away and sell for that price and there's nothing you can do about it. But it is what it is. You can't control these things and you got to just deal with it.
The reality is there's a large group of people that selling for the higher price through conventional means is not the best solution.
Correct.
Operators, that won't have an impact. There will be more transparency and we'll see. I mean, maybe that's how that goes down.
If you're selling your house at a discount because you value, convenience and certainty, these sellers, even nowadays, they're not stupid. They know that they're leaving money on the table and they're happy to do that. And I've never had a seller get pissed at me because we made a rip on their house because, especially if we assign it, they know we're assigning it. We've always been transparent about that. Same with Novation. So it's all about, like you said in the beginning of the show, to tie it together, training, operating the right way, having a system, working your sellers through a good system that benefits them and benefits you. And a lot of that will mitigate whatever regulations come down the pike. So Eric, man, I could talk to you all day. I know you're a busy guy. So we'll start to wrap the show up now. If people want to follow you, check you out, I know you got some coaching you do, I believe. What's the best way for people to connect with you, man, if they want to get more Eric Brewer?
Instagram or YouTube. I put out a fair amount of content, just sharing, what we're going through with growth and how we manage our people and how we train. And I document my journey and put it out there for everybody to celebrate or criticize.
What's your handle at?
It is Eric Brewer Invest, all one word.
Eric Brewer Invest. So Eric, man, always a pleasure having you on, my man. We'll be in touch. And thank you for being another guest of the show.
Thanks, brother. I'll see you.